We have Moses Harding, who is visiting Mumbai right now. Otherwise, usually he joins us from Mauritius, but today he's in Mumbai at IndusInd International Holdings. Moses, thanks very much. Good day to have you. Now, there are two pockets of the market, two sides. One of them is saying you should ride this rally. The other saying book profits, it may not be sustained for long. Which camp do you belong to? Do you think it is getting stretched on the higher side?
See, last time when I spoke a month back, I was a bit skeptical on the higher for longer interest rate theme of the Fed that will keep interest rates high for the next, say, 6 to 12 months. But the manna from the heaven is pouring on the Indian economy and the markets. The macro fundamentals are looking good, growth over 6.5%, fiscal deficit below 6%, inflation under control. So I think the higher for longer Fed theme is very well ring-fenced by the Indian economy and the financial markets. And now markets have started looking ahead of the higher for longer theme. When Fed gets into interest rate cut cycle after the higher for longer, say till mid-2024, then there is going to be a huge rally on Indian markets when into the rate cut cycle. So I think now market has started positioning for 1 year ahead, taking comfort from the next 6 to 12 months that Indian economy has the resilience to weather the storm of the higher for longer of the Fed strategy. So while US markets may get into stability, Indian markets have definitely got into the buy on dips mode, looking for much higher valuation in the years ahead.
Structure of the market has become buy on dips. What kind of growth do you see in corporate earnings? 15-20% easy for next 2-3 years? That much visibility is there?
See, the earnings, definitely US is going to get into recession in 24. We don't know the impact on India exports from the West getting into recession. So that's the only negative factor I see. But in terms of earnings, notwithstanding the risk from the export side and currency side, I think the earnings should be good enough and it will be on the uptrend. I don't see coming down. So 15 to 20% is a very conservative estimate that we need to target it.
You also, mix around with the foreign institutional investor community, and they are the ones who are pouring in money almost every day. At a 30,000-40,000 crore has come in last couple of months. Do you see this flow continue?
See, in fact, it was a pleasant surprise to me when India-US interest rate and yield differential has come to rock bottom 12 months at 185 to 2%, despite high level of US interest rate. FPI's interest in Indian market is a pleasant surprise to me, based on the fact that US will get into recession in the next 6 to 12 months, while India is going to stay positive. So the optimism and confidence in the Indian economy is keeping FPIs attractive towards India, despite high cost of funding from US investors and other Western markets. So overall, the story and the bet is on the Indian economic growth and strong macro fundamentals.
What are the areas of the market which you like in terms of sectors?
See, last time when I spoke, I was looking at other than IT and pharma, I was comfortable on the infra stock, real estate stock, consumption theme, all that. But when the going is good, everything is flying high. Even after the initial dip in IT and pharma, that's moving up. Autos is doing well. Banking and financial services doing well. I think now we need to question the lower pace of valuation increase. So I think I continue to hold well with banking sector and financial services, auto, infra, manufacturing theme. I think majority of the sectors are doing well at this point of time. Well, you need to cherry pick a lower valuation stock. Last time when I spoke, I suggested that any valuation below 50 to 65% from all-time high is a good value pick. And you have seen it that all those stocks have rallied well in the last 1 month or so.
Question, Indian markets have, after 18 months, if benchmarks are any indication, it appears that after 18-month consolidation, they are kind of breaking out. Usually when this kind of a cycle actually happens, the next 2 to 3 years, visibility comes back, or it is very uncertain, it's too difficult to take a call that far out?
In fact, last month I didn't have a good visibility beyond June. But the way now things are evolving in the Indian economy and the financial markets, I think there's a better visibility between July to end of March, that is rest of FY24, that even if there is going to be a rate hike from RBI on 8th June, it's going to be a non-event because the markets are building upon the optimism story rather than the short-term rate hike irritants. So I think it's if I look at the positive factors, there are too many. And if I'm looking to search for the negative factors, other than the rupee impact from the crashing interest rate differential, I don't see any other factor, negative factor on the Indian economy and the markets.
We'll let you go on that one. Thanks so much for joining us on the show today. That was Moses.
Thank you.